Hello. I just wanted to share today's result. I am really feeling like I am happy with the one trade that I took today, right at the New York Open, and I think I'm going to be done. So let me just explain a little bit about the morning and my thought process, and I'll make this fast. Okay. You're kind of watching what was happening here. We had like a nice strong downtrend here. When I turned on the machine, it was right about here. It was about 8 o'clock or so. And I knew that news was coming out at 8:30, non-farm payroll information for the United States. So I sat on my hands to watch what would happen there. We had a volatility range got put in between 15,320 and 15,420 on the NASDAQ 100. So I just kind of watched that, and I didn't really worry about anything. I kind of watched it drift up, and then I started noticing that it had gotten above all the major moving averages that I like to watch, which is the 20, the 50, the 200, and VWAP. So those four moving averages, the 20, the 50, the 200, and VWAP, and the 8, obviously the 8 is purple. It was above all the moving averages, so that was bullish. And then it started drifting back down again, and I figured, well, it's probably kind of drifting back towards the 61.8 level, fib level, something like that. I marked this fib level based on this volatility range at 50%, 61.8. And, I could have looked at the other ones too, but I didn't. Maybe I did, actually. I think I did. But either way, I just kind of hung out, and I just looked at what was going on here. I also was looking at I came all the way back down. Look at that. I was also looking at this level here, the 15,500, which you have to understand that's a psychological level. So price had actually come down to that level and bounced off of it, and I was like, okay, so we've got the 15,500 level on the futures contract. The NAS 100 is a derivative of that, so this number isn't particularly interesting, but this is based on the futures, and that's a major psychological level. So it's no accident that this fractal right here at the volatility top of the volatility range of the news was right here at the 15,500 level, and I did mark it. Can't really see it that well, but I can make it brighter. Okay, so I did mark that. I'll make that a little bit bigger so you can see it better. And I knew that was a key level. Okay, and then what happened was price drifted back down to it, bounced off it once, and then what I really noticed is that hey man, volume comes at specific times. That's how you make money. Volume comes at the New York Open. It comes on the top of the hour, like 10 o'clock a.m. Comes at 10:30 a.m. I got in a trade yesterday at 10:30 a.m. And that happened right here. And I didn't ride it far enough at all, but that one happened right here at 10:30 a.m. I got into this like right here, sold it right here, way a little too early, but you only got about half the move. I also got this move too, and this is the one I wrote up to VWAP. So yesterday I got both of these moves. This one happened at the 9:30 open, and this one happened an hour later, 10:30. So bottom line is I'm looking for convergence of a specific time that I know volume's going to be coming in, and a specific area that feels like a psychological support area, and if possible, multiple moving average support as well. So that's what we had, everything here. And so what I did is I went ahead and saw I like double bounces, and if you know anything about my trading, I like to play the double bounce plays. So there was one bounce and then two, and this was like quite a strong bounce here right at the open. And so I said, okay, let me buy at 30. I'll put a stop down at 15,400. So I put a nice wide stop. Okay, nice wide stop. Okay, usually what I do is I put my stop directly beneath the point of the candle. But now I'm trying something different. I'm trying to widen the stop, give it more room to run up and down. And, I almost gave it like double the stop that I typically do. So what does that do? That reduces my lot size quite a bit. So I was only doing 8 lots, okay, 8 micros. So that's not even one full mini. But anyway, that's what I did so that I could feel more comfortable and not get stopped out as quickly if I was going to get stopped out, or if it was going to like retest that area again. So I just let it ride. And then what I did is as soon as I was up 1R, I moved my stop to break even, and then I just trailed my stop manually up. And then I could see kind of like it put in this 5 minute, put in this, I could see that the momentum was slowing up here, and I knew that I was already at 2R up here, and I could see the momentum slowing. So I kind of just, I went back to this chart again. I used this is a tick chart on Bookmap, and I got a little bit more data from this because, let's see, where were we here when this happened? Okay, we're right, yeah, I can't drag this. Can't really drag this. Okay, so I was looking at this really carefully at the top here. And the momentum started to slow, and let's see there. Yeah, the momentum began to slow down, and I got really granular here with this. I could see that, okay, here you've got, this is a tick chart, so you can see higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay, all of a sudden we've got a lower high, and not quite a lower low yet, but a lower high, a lower low, a lower high, a lower low. And when I saw all that happening, I'm like, okay, you know, this is showing me that this nice opening move is probably done. So I sold right here for 2R. Well, I was happy for 2R, and that was a trade. So that was the whole thought process behind everything. You know, I'm only going to do that one trade. My thing that I'm really thinking about a lot these days is accuracy, risk, and frequency. And for me, accuracy was putting all together the pieces of this puzzle to take this high probability trade that, you know, hopefully was going to work out. Risk, I widened my stop to reduce my risk and lowered my lot size because I had to do that to widen the stop. So I had a small risk, my normal risk, $250, and then frequency, I'm stopping at 1. I'm keeping the frequency really low, which is the whole idea here about frequency. Low frequency trading is what I want, with very few trades. So I accomplished, I think, all 3 goals today. I did good accuracy. I had a fair amount of risk, but it was, you know, a fairly conservative. And frequency, I'm stopping at 1. So that's it. 2R for the day, and I am done. Currently, let's see here. One last thing I want to look at real quick, and that is my my equity curve on Lux, my progress. I want to share that real quick. Hang on for a second. Let me open that up. Okay, this is where we are right now. Equity is now almost 203,000, getting closer. Profit target 12,000. Active trading days, I've done 4 out of 29 needed, and my equity curve is, you know, slowly rising. So keeping it conservative, keeping it light, and the goal here is to trade conservatively with small risk, take very few trades, and just be as accurate as possible with my analysis. So that's everything, and I'm done for the day. I'll talk to you later.